So we just learned that Lilu bought 1.4 million shares of Occidental Petroleum in the last quarter. We also learned that Mohnish Pabrai bought a bunch of Occidental stock as well. And of course, this follows the greatest investor of all time, Warren Buffett, who is loaded up on this stock, and now it is a top 5 position in his portfolio. So why are these top super investors buying Occidental Petroleum stock? We're going to discuss that in this video here today. In fact, I think Occidental Petroleum stock is undervalued by about 45 to 55%. We could see that appreciation in its stock in the next 18 to 24 months. So we're going to discuss that all here today in this video. So first off, what does Occidental Petroleum do? Well, they are one of the largest oil and gas producers in the entire world. They've been around for a while. In fact, Vicky Hull herself, who runs the company, who's the current CEO, has been with the company for 4 decades. She's been running the company strictly since 2015. She has done a great job in transitioning the company and basically getting rid of parts of the business that were low margin pieces of their business. So they've really focused their business on a couple of main basins in the United States. And the most critical one of all is the Permian Basin, which is the lower part of the United States. So Texas, for example, is in the Permian Basin. In fact, if you look at all oil and gas produced in the United States, 30% comes from the Permian Basin itself. Out of that 30%, Occidental produces 10% of that. Now, they are also in the Midland Basin as well. In fact, they just announced or finalized an acquisition of Crown Rock in August earlier this month. That will also give them more leverage and opportunity in the Midland Basin itself. But in this video, and this company is really geared towards the Permian Basin. That is extremely important for Occidental Petroleum because they've become the low-cost producer in their industry. If you look at Chevron, for example, their gross margins are around 40%. Their operating margins are around 12 or 13%. If you look at Occidental, they have gross margins of 60% and their operating margins are above 20%. So for a oil and gas producer, being able to get a 60% gross margin is absolutely incredible. It really gives them an advantage over their competitors. The reason for that, this is a commodity type business. So the price of oil, for example, a barrel of oil, which is around $74 here today, really determines on the revenue, which falls all the way down to the bottom line for all oil and gas producers. If you can make it cheaper than everybody else, you can make money when oil drops, even below $40 a barrel. And Occidental Petroleum can still make money in the Permian Basin, being under $40 a barrel, while their competitors overall cannot make money unless it's closer to $50 a barrel. So that is where it's really important and critical for Occidental Petroleum have their competitive advantage over their industry just in general. And I think one of the main reasons why Warren Buffett and these other investors have bought into Occidental Petroleum itself. Now, there are several risks with oil and gas producers just in general that you need to be worried about or just be aware of in general. And one of those where he talked about this is a commodity type business. So their revenue is strictly tied into how much a barrel of oil costs or how much it costs gas, for example, and the market really dictates on what that cost is going to be. Currently, a barrel of oil right now is $74. That is a good price across the industry. Now, when I looked into the EIA and they look strictly at Brent crude, they forecast that Brent crude specifically is supposed to go up in 2024. It's in the high 70s right now. By the end of 2024, they suggest it's going to be between $80 and $85. They believe that's going to grow into 2025, reaching $90. So that would be good across the board for this industry if that happens. Now, if it goes the other direction and goes below, say, $60 a barrel, that obviously is going to be a problem, and you're going to see Occidental and other companies of the industry maybe pull back on production because they're just not going to make as much money as far as margins go. Another risk with the company is their debt. Now, this is a company, if you look at their debt to equity, it's roughly about 65%. Now, if you look at competitors, say like Chevron, for example, it's below 20%. So from a market cap perspective, Occidental has 3 times as much debt as, say, Chevron does. does, which is a problem, right? Now, Occidental has been paying down their debt significantly. If you look back a few years ago, it was almost $40 billion. Back in 2022, it was roughly $30 billion. They've been able to pay that all the way down to about $20 billion here today. In fact, in August, they're saying they're going to pay off roughly $1.3 billion, and it's going to be roughly about $4 billion going into quarter four. So I believe their debt is going to be reduced down to, say, roughly $15 to $17 billion in total by the end of 2024, which is great. They're going to continue to deleverage their balance sheet. If you go back to 2022, the company came out and said that their goal was to pay down their debt by roughly $15 billion over the next 2 to 3 years. So getting down to, say, $15 to $17 billion by the end of 2024 puts them within that range. So they're on the trajectory that they wanted to be. Another piece of that, too, is they pay a lower dividend versus their competitors. And the reason for that is because they're trying to pay down their debt. So as their debt comes down, I think as they get close to $10 billion, I believe that they're going to continue to increase their dividend and get more in line with what competitors are here today. But I think it's smart by the company to continue paying down their debt in the meantime. So what would be a valuation for Occidental Petroleum? And here is what I think or how I value Occidental Petroleum. First off, if we look at the business here today at $74 crude oil, they're going to produce roughly around $28 billion in revenue this year, not including the Crown Rock acquisition. Now, if we go into 2 years into the future in 2026, if we assume that crude oil is going to trade around $75 at that time, just trying to be conservative. A lot of projections I see are going to be higher than that, but again, this is going to be conservative as possible. If we also assume that gas is going to be roughly $2.15, which is in line to where it is today, with the Crown Rock acquisition, they should be able to produce roughly $30 billion in revenue in 2026. Now, then if we assume that operating margins are going to be roughly 21% that year, which is very conservative. That's where they are at today. They've been all the way up to even over 35% in the last 2 years. But I think 21% is pretty conservative for this business. Based on that, they should have roughly $6.3 billion of operating income for that year in 2026. Now, if we take that, divide it by total shares outstanding, which is 935 million, that comes to roughly $6.73 of operating income per share for the business 2 years from now. If the business continues to pay down debt like I believe they're going to do, and they get closer to that total debt of around $10 billion by 2026, I believe the market should be paying a higher multiple than what they're doing now for Occidental. But nonetheless, we're going to still be very conservative in these assumptions, and I'm going to say that the market is going to pay a 13 multiple for this company. So if we take that $6.73 of operating income per share, multiply it by 13, we get roughly $87 for the stock price in 2026. Now, instead we say, hey, operating margins are going to be closer to 23%. That would push actually the stock price up to $97. So I'm suggesting that the stock is going to be between $87 and $97 by 2026. So around 18 months to 24 months from now, that's roughly a 45 to 55% stock appreciation from where it is right now. But again, these are all assumptions. Could be wrong. If the barrel of oil drops below $75, obviously changes the assumptions. If the company's not able to pay down as much debt as what I'm suggesting, I think they're going to do, that could change it as well. But again, just trying to be conservative across the board. So overall, I can see why Warren Buffett, Li Lu, Mohnish Pabrai, and a lot of other super investors are buying this stock. It does look cheap right now based on the assumptions that we talked about here today. But I would love to hear from you guys. I mean, what do you think about Occidental Petroleum? Do you own that company? If you have questions about, how do you value companies in general, that is one of the key aspects of trying to evaluate companies and trying to figure out, is this a company that is worth buying into or not? If you have those questions, you don't know how to do that, I do offer free templates on my Patreon as well. I have 3 different valuation templates on there that I personally use myself. If you're interested in something like that, I'll put a link down below to that Patreon. You also get access to my Discord channel as well, with over 100 value investors in there as well. Check that out. Love to see you guys over there. Thank you so much for watching. I always love these videos, looking to Lee Lu, Warren Buffett, Mohnish Pabrai, and others. So thanks again for watching. Take care and God bless.